Good morning. I'm Andy Myers at Weiss Research, and this is your morning market alert for Wednesday, November 9th. Stocks on Wall Street are set to open sharply lower, and the European markets are suffering heavy losses amid continued concerns about Italy. The sell-off began after clearing firm LCH ClearNet raised its margin requirements for Italian government debt. That caused investors to dump the bonds and sent the yield on Italy's benchmark 10-year note to a new Euro-era high of 7.4%. The yield has since come back down below 7%, but it's still at a level that many strategists consider unsustainable. When bond yields hit similar levels in Greece and Portugal, it effectively marked a point of no return. Those countries were shut out of the credit markets and forced to seek bailouts from the European Union and the International Monetary Fund. But Italy is considered too big to bail out, especially given the doubts about the size and flexibility of the Eurozone Rescue Fund. Those fears are not only weighing on equities this morning, but the euro as well. The shared currency is sliding more than 1% against the dollar and is now below the 136 level. Investors are also flooding into U.S. Treasuries, sending the yield on the benchmark 10-year note back below 2%. And the dollar's relative strength is weighing on most commodities. Crude oil is now trading just above $95 a barrel. However, gold is holding steady around $1,800 an ounce, thanks to its appeal as a safe haven investment. Today's stock sell-off is set to wipe out a late bounce in the U.S. markets yesterday. That rally followed an announcement by Italian Prime Minister Silvio Berlusconi that he would resign once Parliament passes new legislation on austerity and economic reforms. That announcement came after Berlusconi failed to win an absolute majority in what would normally be a routine budget vote. The result showed that the Prime Minister would likely lose a confidence vote. Turning to corporate news, the biggest name on today's earnings calendar is General Motors. The automaker reported a 15% decline in third-quarter net income. Despite the drop, GM's bottom line still topped estimates, as did its revenue, and the company also affirmed its outlook for the full year. But GM said it no longer expects to break even in Europe due to the region's deteriorating economic conditions. Right now, the stock is falling 5%. Another big decliner ahead of the bell is Macy's, down more than 4%. The department store chain posted quarterly profit of 32 cents a share, but adjusted earnings missed Wall Street forecasts. Also on this morning's earnings calendar are Ralph Lauren, Dean Foods, Wendy's, and Green Mountain Coffee Roasters, among others. And after the closing bell, we'll hear from Cisco Systems. Its shares are dropping nearly 2% ahead of that report. After yesterday's closing bell, video game makers Take-Two Interactive Software and Activision Blizzard reported their results. Both stocks are falling nearly 3% right now. And we'll finish up with one more stock decliner from the technology sector. Adobe is tumbling more than 10% after saying it will cut 750 jobs as part of a restructuring plan. The software maker is trying to align its businesses around digital media and digital marketing. Adobe also lowered its earnings estimate for the current quarter. That's the latest from Weiss Research. I'll be back after the opening bell with all the market reaction.